Investing in the stock market can be a thrilling journey towards financial growth, but it requires careful research and strategy. Let's break it down step by step, shall we? Firstly, when it comes to selecting investments, you have a few options: individual stocks, exchange traded funds, also known as ETFs, or mutual funds. Think of it like choosing toppings for a pizza. Each option offers a different flavor profile. Individual stocks may provide a more concentrated opportunity for higher returns but come with higher risk. ETFs and mutual funds offer diversification by pooling your money with other investors and investing in a basket of stocks or other assets. This can help mitigate risk while still providing the potential for growth. Next, let's talk sectors. Just as you wouldn't put all your toppings on one side of the pizza, you shouldn't put all your investments in one sector. Diversification across sectors helps spread risk and maximize potential returns. Consider sectors with strong growth prospects, such as technology, healthcare, or renewable energy. However, don't overlook traditional sectors like consumer staples or utilities, which can provide stability during economic downturns, and keep in mind that diversification doesn't assure a profit or protect against a market loss. Now, let's address the importance of time horizon and risk tolerance. Your time horizon is like the oven timer for your investment strategy. It determines when your investments will be ready to serve. For long-term goals like retirement, you can afford to take on more risk and invest in higher growth assets. However, for short-term goals like buying a house or funding a vacation, you'll want to take a more conservative approach to protect your capital. Risk tolerance refers to an individual's willingness to endure uncertainty and potential loss in pursuit of financial gain. It varies among investors and influences their investment decisions and asset allocation. In conclusion, successful investing in the stock market involves a combination of careful selection of investments, diversification across sectors, and consideration of your time horizon and risk tolerance. By following these principles, you can navigate the ups and downs of the market with confidence and work towards achieving your financial goals. Remember, investing is a marathon, not a sprint. So be patient, stay disciplined, and enjoy the ride.